Hello and welcome to Business Finishing School. Let your business brain finish what your entrepreneurial heart started. Our catalyzing statement is a successful entrepreneur inside of every business. Enjoy this module. Hello and welcome to Module 32, Scenario Accountability. Rick, this actually grew out of a private conversation you and I were having, and I felt it was an important enough conversation that really should be shared with the whole Business Finishing School audience, because it is many times the biggest, I think, death threat generally to all businesses is the fact that they go too far out on a limb, an adverse situation happens, and as a result, they lose their business or they're damaged irreparably within the business. And I want to take it a step further, because in year one, we talked about the battleship principle, which I think, anybody, obviously you're in the program, you can go back and revisit the battleship principle. But in this particular case, I kind of want to get more into a practicality of it and get a little bit more personal with it, Rick, because you've been through this in really dramatic fashion. And I think there's a lot of lessons to learn from you. And I'm going to give a metaphor here, I think, that will be very helpful leading in. A friend of mine who was a high-level heart surgeon, he said to me, the way that I can determine whether or not somebody is going to live or die after I have to do usually some types of really crazy emergency surgeries, whether it's valve repairs, whether it's heart transplants that he does, bypass surgeries, which he does, etc. He said, I can get anybody off my table alive. I can guarantee you that no matter how bad you are, you're going to get off my table. The question is, are you going to survive for the next week in the hospital or not? He said, and the determinant of that is what you did prior to getting in to the hospital, getting to my table. You get it, right? And he said, if you think about it, and this is true, and it's true of business, and you've taught me this, if you live long enough, you're going to face some big challenge at some point in your life. There's just no two ways about it. And what's going to determine whether you're going to get through that challenge, that health challenge in this case, is how did you live up to this point? Well, it's the exact same thing is true in business. If you're in business long enough, at some point you're going to face a major challenge, and whether you make it through that challenge is a byproduct of how did you manage your business up to that point. So let's actually dig into this a bit and wrap people's heads around it, because if you're in year 3 now in this program, well, you've been in business hopefully for at least a few years if you're a new business, or maybe you were an older business, but we know that that the time is coming, if it hasn't come already, that you're going to face a big challenge. And quite frankly, it could be multiple big challenges. So if you don't mind, I'm going to tell a little bit of the background of when we first met. We got into our accountability group together. This year is about accountability, obviously, in the program. But I can remember clearly that you had come off of a long, embittered battle that I think you said over a period of years in lawsuits and legal and everything else maybe cost $20 million. Mm-hmm. And then right on the heels of that, okay, that was over, and you came out of it, and you came out of it with integrity. Basically spent $20 million to prove that you did everything right and nothing wrong. But that happens, to good people sometimes and good businesses sometimes. The government sues, Microsoft, the state attorney generals get together and want to create antitrust suits, et cetera, et cetera. Why was Microsoft able to fight through those battles? Because they had a war chest of cash to be able to do it. Then, though, what happens is 2007 and 2008 happens, and the economy falls off a cliff, and you're in a business where you need to make transactions and business transactions and raise investment money and that type of thing. So you come out of this battle, and one battleship that you built said, hey, we had the funds and the ability to weather this battle and the mental fortitude. Then right after that, you fall off a cliff. The economy falls off a cliff. And now it's like, wow, you're stalled. And I can remember being on calls, you hearing you say, we're kind of stalled. We've got dozens of holdings. They're holding their own just fine. But our business is about making transactions, selling businesses and being able to buy new ones and you're just kind of in a stalled pattern with that because of the economy. Yet you were able to weather yourself past that, which was years ago now. So, now several years go by. And in my kitchen this morning, before we're getting ready to do this recording, you said to me, wow, we're really got some momentum. We're making money like we haven't in years right now. Transactions are happening. There's stuff going on, and I acknowledge the fact that, wow, look at the phases of what you had to weather to get back into your normal business track and rhythm, to be on the level of success and beyond that you were prior to all these downturns happening. So I'm prefacing this whole conversation because I think that's a shining example, number one, of you living the principles you talk about, the battleship principle, but also have the people who are here who are paying us to get insight into business and how to be strong in business and how to succeed in business, that this is a critical one, that you plan for the downside of things and you're able to work all the way through it and to be able to come out on the other side and say, hey, we're still here where most other people get wiped out. So I guess we start with this. When you were going through the first phase of the challenge that we talked about, that was a $20 million multi-year battle on your part. What was your mindset? What was it that got you in a position to be able to fight that battle and to not give up and to get through it? And let's talk about that first. And after that, I want to talk about then the next shoe drops and how did you get through that?
All right. So first thing I want to teach the listener as you're listening is we want to think about ourselves and our businesses in terms of a thermostat. Too often businesses set their thermostat too low. And what I mean by that is they're operating without enough cash, they've got a lot of debt, and one small incident happens and they're out of business and they're struggling for their lives. So the only way to raise your thermostat is to be debt-free, and if you are going to use debt, use asset-based lending, where you've got a lot of coverage there. So if the economy falls apart, you could sell the asset to, you have to make sure you have a lot of coverage there. You can sell the asset and raise money. So I don't want you to overlook the word thermostat. It's a huge word. It's something you really need to think about. It's interesting, Pat, I was talking with a member of the program and you were there, and this particular member was saying, well, I like to use my business to have high income, and I like a high lifestyle, and my business is always going to take care of me. And if that's how you view what we're trying to teach you, that is completely wrong. We are in the business of teaching you how to create a business that is worth money, that is saleable, that will grow and prosper and endure through any market. It's not about you having a lifestyle. If it's about you having a lifestyle, why even be in business? Go get a high-paying job somewhere else where you get commissions for creating sales. So the first part of the answer is I want you to think about your business in terms of a thermostat, and you need to raise it as high as you possibly can. And for me, that thermostat was raised to zero debt, millions of dollars in the bank over a period of time. Why? Because we knew that no matter what, no matter how blue the skies were, there was always lurking around the next corner some potential catastrophic event. And when people say things like, I didn't realize that could happen to me. Well, I have news for you. It will happen to you. You think of a scenario, it will happen. Because it happens to Microsoft, it happens to Southwest Airlines, it happens to Apple Computer, it happens to every single company that you look up to. It happens. So when you're surprised, that is kind of a BS response. People say to me often, I just didn't think it could happen. Well, it will happen. It will always happen. It happens to everybody.
And incidentally, a reason why many entrepreneurs get blindsided is because by necessity and by design, basically, an entrepreneur is a naturally biased, positive person, right? I mean, the only type of person that would take a risk, go into a business and think they can make it is someone who's to some degree blindly optimistic. That's what gets them started. But the paradox is that blind optimism can also get them in trouble once they're in the business, because they don't really ever see a half full glass. They don't really prepare for a bad day. And just to be very transparent, I'm totally guilty of that over my 30-year career in business right now. multiple times where I'm just always seeing the upside and then leveraging in a way, in an unhealthy way, not in the way that you teach it, to say that, wow, well, now we can do this, and now we can do that, and now we can do that, rather than saying there's a filter over my vision that says I have to be prepared for a coming storm. I don't know when it can come because nobody can really predict the weather, but the bottom line is it's never blue skies every day. At some point there's going to be a storm, and I better now make my business decisions based on that context, not to be negative, but just to be prepared and be a realist, so that when the storm comes, I'm ready and I'm prepared, as compared to multiple times really getting myself into some deep shit because I wasn't prepared.
All right, Pat. So to go back to your question about where was my head when this was all going on, I want to take you through a scenario that was very important to me for a couple of reasons, and this perspective was important. I look at every day of my life and every scenario that happens to me from a what can I learn from this perspective. So whenever I've been involved in a lawsuit, I very rarely have any anger toward the other side, no matter what they do, because I know that right now there's X millions of lawyers in the United States, and those X lawyers don't get paid unless somebody gets sued. Mm-hmm. So we already know that lawyers will sue us. It's just a fact of life. And if you get blindsided by a lawsuit, that's just stupidity. So just if you don't get anything out of this module but what I'm about to say now, then you got it. You will be sued. If you're in business, you will be sued. So don't be blindsided when it happens to you. So have a what can I learn from this mentality. This entire program, this entire module, but everything about the modules in the program is that we don't want you to go through a brand new experience that we've already gone through. Our hope is that me and Patrick, our cumulative 70 plus years in business, and all the mistakes we made won't be repeated by you. And I know you've heard the quote from us that people usually don't make the same mistake twice; they make it 15 or 20 times. Right. We want you not to make the mistake even once. So the bottom line is, what can I learn? So I had that philosophy. So what happened in 2003? It was a massive lawsuit was put on one of our holdings, and the business that they brought the lawsuit against was tracking a $7 million net profit, not EBITDA, net profit. And so what I decided to do first when I was battling the government is shut the business down. So when you shut a business down that's making $7 million in profit, incredible. How much does that really cost? It might have cost more than $20 million because we could have sold the business for more than that. But the reason I did that was for the sake of simplicity. I didn't want to be running a business with a case associated with it, which would damage our reputation. I also knew that the holding company had other holdings. So going back to the battleship principle, if you're diverse, you set up a holding company or you have various product lines, if a major case happens to you, you've got other ways to create revenue. So my thinking the whole time is, how can I cut our losses, minimize our damage, and how could I stay in a positive emotional space?
Right.
And to a large extent, I did. In fact, during that entire time, on the day the case happened, the very day it was launched is the same day that I met for the first time my wife. The same day. So I began a relationship, and my wife and I got married 2.5 years after that. And during that whole time that we were dating, it was a very positive aspect of my personal life. But from a business perspective, it was a battle, and I had to go to work every day battling. So when you talk about mind space, you have to think about, how do successful people handle negative events? And I remember talking to Sir Richard Branson about this, and I asked him how many lawsuits he had going on, and he said, major ones? And I said, yeah, major. And he said, about 75. And, it brings me back to, friends that have one minor lawsuit because an employee said something about them, and they're crawled up in a corner crying over a damn lawsuit. Right. So I believe a lot of this blindsidedness is attached to a word that I don't think we've ever used in the program, and the word is arrogance. Mm-hmm. When I'm sitting across from somebody who's got an arrogant point of view on a particular thing in business, I realize that they're going to be blindsided. Oftentimes people call me up for advice, and I give them advice because they're asking for it, and they argue with me. And they'll go to the next person. Well, a person who asks various people for advice and never takes it, that's called an ask-hole.
Asshole. Okay. There's another term you haven't used before in the program.
So you don't want to be arrogant, and you don't want to be an asshole. You want to be somebody that takes the information we're giving you and takes the information that you're getting from other areas of your life and using it in a balanced way to advance your position. So I think I covered my mind space enough and answered the question.
All right. So now you weathered through this. You get your mindset together when the storm comes. But now, isn't it maybe a typical thing that employees might want to jump ship? Okay, so now the business takes a torpedo, right? And the captain's saying, hey, we got to bail out the water. We got to do it. Come on, everybody get together. Where some people are saying, hey, you know what? I'm jumping in a life raft and I'm getting off this ship and going somewhere else. How did you manage that?
Well, one of the things that we learned through the process is total transparency. When we hire employees, we make sure that we check their credit. We make sure that we're extremely thorough with people. And people knew how thorough our hiring process was. People also knew how thorough our vendor procurement procedure was. Before we bring on vendors, we go through a process to make sure that they're solid. So the culture inside of our business, we did as much as we could to make sure we're honoring the principles that we talk about in the program. So there was a very consistent nature to it. So when it happened, we got a tremendous amount of support from clients, from employees, from ex-employees, ironically, because they knew that, we were a tight ship. And I think to a large extent, whenever you're involved in a controversy of some kind, if the other side knows that you're solid, in a sense, that's going to inform how they interact with you as well. And as an example, I was recently reading about a friend who's involved in a legal case. And it turns out that the other side who was suing him found out about drugs and extramarital affairs and IRS liens. And when you start finding things like that, which means you're not living an integrated life, that only exacerbates the problem. So I believe that situations like what we're describing happen to people all the time. And I believe it's the universe's way of testing your resolve, testing your principles, etc. But also, if you live an integral life where you have a consistent philosophy, which we're going to get into in future modules, then it's much harder to bring down the ship, especially if that ship has no debt, especially if that ship has built, to use a Garrett Gunderson phrase, relationship capital over the long haul. So you want to make sure that you're using elements from all of the modules that precede this one, so that when that inevitable thing happens, not only are you prepared for it, but you'll withstand it just like a battleship can withstand any kind of torrential storm.
So, and to be clear here, we're using lawsuits as only one example of what can happen, that can derail the momentum of a business. But I could tell you, for example, and this is the thought experiment, as you're listening to our voices right now and processing this information. We have to, and again, it's not my nature to be negative or to anticipate bad things, but hey, a terrorist attack could hit again. And when it does, the markets get scared, people stop buying, all kinds of things, you go into a tailspin. It's happened before, very likely going to happen again. And the question is that I have for you right now, because if you say, I think I'm okay, well, here's the test. What if there was a major terrorist event tomorrow that caused a big pullback in the market, consumer confidence went way low, people were afraid to spend money, banks stopped lending for a period of time, and we always recover and then we get back on track, etc., but there's going to be that period in time. If that were to happen tomorrow, what would happen with your business? Because the bottom line is that if you're to say, oh my God, we're vulnerable right now, if we
Your thermostat's low.
your thermostat's low, exactly, to use the thermostat metaphor, your thermostat's low, it's set too low. Then it's time for you. Your wake up call. I mean, literally, this one module, because you're listening to us talk about this, is worth 100 times what the whole course has cost for 3 years, because it's literally going to salvage your business. Because this is your time to pause, take a look at your reality, and then do something about it so that you're prepared should something like this occur. And I guess in one respect, there's two dimensions of this, Rick. One is your headspace and ability to tolerate the circumstance or manage the circumstance, which we spoke about. And the other one is, of course, just your fiscal ability. So you kind of spoke about this to an extent, but maybe we dig a little bit deeper, and maybe you can even give some direction on this. To a large extent, it's really a balance sheet issue, isn't it?
It is. And I want to back up a minute and say this. The reason we're naming this module Scenario Accountability is because we want you to be accountable to any scenario that may come into your life and be responsible for it. Mm-hmm. You cannot be surprised when you take responsibility for things that happen to you, full responsibility. 100% full responsibility. That's going to help get you through it. So going back to the balance sheet issue question, I love what Emerson once said when he was staring at the wilderness. He said, wealth is really a simple thing. If your income exceeds your outflow, you can build wealth over time. I mean, how simple is that? And we go back to the word arrogance. It's so arrogant for people to believe that they could suck all the money out of their business, they could extend their personal life, drive cars and be in homes that they can't afford, and think that there'll never be a scenario where there's not enough money to pay all of their business obligations. So going back to Emerson's quote, in every area of your life, personal and business, you absolutely have to make sure that the revenue is much higher than the expenses, period. Now that sounds so duh, but you wouldn't believe that more than 70% of businesses that I look at, they haven't even figured that out. So when it goes back to the balance sheet, most of the time, and I would say the vast majority of entrepreneurs and business people and people listening, they focus on the P&L when it comes to their accounting knowledge. I am a lone soldier oftentimes in business meetings where I spend all of my time on the balance sheet. I could care less about the P&L. The P&L is very similar to love in a marriage. The P&L is going to go up and down. Okay?
And let's, just in case, to familiarize people with the terms that they probably already know, but the P&L's profit and loss statement, also sometimes referred to as the income statement, where you're just in a given period of time you're looking at revenue versus expenses and seeing what the profit is.
Right.
So that's, then you're saying those are up and down. How would you characterize the balance sheet?
Yeah. Well, let me go back to the analogy. So in a long-term marriage, I am committed to my wife for life. I made that commitment in front of family and friends. And there are times when, we have a big fight. Love is going to go up and down.
Right.
But the commitment is steady and it's long-term. Same thing is true in a business. That balance sheet and the solidity of that balance sheet needs to be steady and long-term. Profit is going to come and go. You're going to have products that go out of style. You're going to make bad bets on various investments. You're going to have years where you extend too much. And that balance sheet is going to go up and down. But the long-term commitment to your purpose, your catalyzing statement, your values, and ultimately your balance sheet, which is where your assets reside, that needs to be long-term in nature, needs to be solid. And that solid balance sheet is what you're going to build the foundation of your business upon. And so you've heard me say, going all the way back to year one, where I was in a group of men over a long period of time where we met monthly for 10 years. And me and one other guy in this group, we were balance sheet focused. And the other guys would tease us. All you guys care about is your damn balance sheet. And, I'm doing 100 million in revenue. I'm doing 200 million in revenue. We just had our best quarter. And then when the 2000 downturn hit and the market crashed in 2000, all of those guys went bankrupt, and girls. There was one girl in the group. And the only two people that survived it were me and this one other person, because all we cared about was our balance sheet. So when you talk about scenarios, wow, here I'm in a business. In 2000, the market crashes. In 2001, there was another incident in our industry that hurt us. Then 2003 lawsuit. Then 2007 downturn, and we had a lot of real estate investments. And we survived each one of them, and now we're healthier than we've ever been. But that's all because of being accountable to scenarios.
Again, just to be vulnerable here, I am guilty. In the past, I've been very guilty of what you talked about. The people who live by the P&L are the lifestyle people, saying, "Hey, the purpose of my business basically is to fund my lifestyle," and that's kind of the attitude that gets them in trouble, because they can give a shit about the balance sheet, saying, we'll play whatever games we have to as long as the profit's there and I can, I have the cash flow to pay for this lifestyle. That's all that matters. And where I got into trouble, into pain, was you can play tricks with how you do your accounting, not illegal but legally, how you can, when you have your own business, and you could say, okay, well, there's certain ways that you get tax advantage, and you'll compromise your balance sheet with with varying loans and so on that go on the books to offset taxes, in a business that's not a C corporation, but usually an S corp or an LLC that you kind of own and manage and make a lifestyle thing, where you're saying, hey, look at how much profit we're making. Who gives a damn if the balance sheet looks a little bit weaker? Who gives a damn about these ratios, et cetera? And I can remember we carried certain notes and debts on the balance sheet, and when we'd be out there and I'd be sitting with my financial team, and at the time I had 55 employees, I had 6 people in the finance department, I had a CFO, and we'd review this stuff. And whenever we went out for any kind of bank financing or anything like that, we always had to explain things on the balance sheet to the bank, and they say, there's a footnote here. We explain that we see that there's this, shareholder loan or what have you, but that, we subjugated to these other things. I mean, there's all these tricks we played to basically have to explain away why our balance sheet didn't look as strong as it should have. And we'd always be holding up the P&L. You see me right now, I'm holding up like a fake piece of, look at how profitable are, look how much revenue we're generating. But in the meantime, the bankers and the people who are really kind of like that want to analyze a business, they're literally looking at that balance sheet, and I'm remembering I always had to have some kind of an explanation, as compared to if I really managed in the way that you're teaching right now. If I had met you 10 years earlier, I would have completely had a different experience as far as having a much stronger balance sheet, which would have ended up in having a lot more value in my business, especially when I went to sell it.
Thank you for demonstrating the point, Patrick. And what I want to add as well is oftentimes business people and all types of people, actually, they over-regard lawyers and accountants' comments on how to set up a business. So they're thinking all the time about saving taxes and writing this off and writing that off. And what they're not realizing is when you write something off, you still have to pay for it. It's not magic. When you write something off, it's not like it's free money. If my tax rate is 40%, I'm still paying taxes. And when people say that they're writing things off, it's almost as if they think they're printing money, like they don't fully understand what write-off means. Write-off means you're paying something, you're just paying a little bit less in the form of taxes. So that's one point. Point number 2 I wanted to bring up at this point is when you consider your organizational structure, I over-preference C corporations. And the reason I do that is because C corporations, for me, are the easiest type of entity to navigate. They're easy to buy, they're easy to sell, they're easy to do tax preparation work for, etc. But oftentimes people set up S corporations, and then as their corporation grows, all their profit is flowing through to them personally, which is the exact opposite of creating an entity that's outside of you, that employees work for, that people want to grow. An S corporation sends the message that this is about me. And tax preparation professionals, CPAs, etc., they over-preference things that they think are popular. You need to make sure that your advisors know the type of business you want to build long term, and you make the appropriate structure associated with that. S corps to me are smaller business. Sole proprietorships are small businesses. So you have to make sure the type of organization that you form and that you have is an expression of what you want to build. And the other thing is, and I'm not advocating that you do this, but for me personally, I never, or I shouldn't say that, I very rarely make business decisions based around tax laws. And the reason is tax laws change, and you make this decision, and you have to reverse it later, and people form structures because of the popularity of a tax code change. And I never look at the world that way. I look at the world from a very long-term perspective. What's the easiest type of business to own, maintain long-term, and create wealth from? Not how can I save taxes because of the code change of the day. And very often professionals look at whatever the popular thing is based on the new tax law change. I just don't see the world that way, and I think you'll save yourself a lot of time, effort, energy, money, and aggravation by taking a long-term view on everything that we're talking about right now.
You know, it's interesting, and we'll cover this in the next modules when we start getting into the philosophy of business, because what you're portraying here is a view of the world, you know, from a business context. It is a philosophy, and it's funny, you're 100% right, because what does an accountant think their job is? To save you money in your taxes. You know, they feel like they're doing a better job if they get more tax savings for you. So that's their philosophy, that's their approach, that's their view of the world. Your point of view is, I want a long-term sustainable entity that's sellable, leverageable, etc. And you can't fully take advantage of every tax break possible and build that entity that you want to build. So it's all a matter of what the intention is and what your point of view about reality is. And if you're in a lifestyle business, then of course you're going to say, hey, my entire goal is to figure out how can I save taxes. People would look and say, you're crazy for paying double taxes. Why would you want to retain profits in a company, pay taxes on it, and then if you pull some of that profit out, you're going to pay tax again? That's double taxes. That's nuts. The accountant would convince you of that. You're saying, I want a structured company that's not a lifestyle business, but is an entity in and of itself, independent of me, that's got its own life and existence that is sellable. And that's really what it comes down to here. And I got to tell you, it takes a while to really think about this before your head gets wrapped around it. What's kind of amusing to me in experiencing you is that it's so clear and matter of fact that the first couple of times that you explain it, it doesn't land. It really, for a guy like me, it's been a sole proprietor type entrepreneur, built companies, etc. But started with nothing, didn't bring in outside partners, didn't bring outside investors. The world was always kind of a certain way, and I'd hear you talk about this, and it never fully landed. But you speak about it in very simple and just very matter of fact terms. It's so obvious to you. And I don't know, I still don't think that you get how this is a very obvious thing to you, and to a lot of other people, it's almost like a foreign language, and it takes a while before they learn the language. But once you learn it, it's like, oh, well, now I'm starting to get it.
And it's ironic, first of all, the reason why I like the corporate structures that I advocate is simplicity, probability, and leverage. The other thing that makes it ironic is when I went out and interviewed those 26 extremely successful people, and many more since, everybody lands, for the most part, on C Corps for the very same reason. And yet, all these new people, they start their business, and should I have an LLC? Should I have a GPLP? Should I have an S Corp? And as the businesses grow and prosper, I've had accountants say, well, now you're at a point where we have to switch you to a C Corp. And you're like, wait a minute. Now I have to go through this nonsense to switch? Why didn't I just start there? Well, it was easier and blah, blah, blah. No. It's much better to start with how you envision yourself being 25 years from now than it is changing with the times because of popularity of a new way of doing things. So with all of that, I would like to begin the wrap-up of this module. And this module, again, is entitled Scenario Accountability. You need to look at your business from a perspective that you will encounter negative scenarios. And when you encounter those negative scenarios, you have to have the mind frame of, what am I going to learn from this? And not, wow, look at what they're doing to me. So it's more of a challenger perspective as opposed to a victim perspective, because it will happen. And you cannot be blindsided. Once you've heard this information from Patrick and I, you can't be blindsided. So when I see you at the boot camp, you can't say, you're not going to believe what happened to me now, because it will happen. We had, over the last week, a massive computer failure at our company. And I didn't play the victim. I know that over time, just like you've gone through, we're all going to go through our computer failures. So it's going to happen. It's inevitable. It's unavoidable. So when it happens, don't be blindsided. Don't be frustrated. Just take it in stride. So, Pat, you want to close out?
Well, I just think that this is extraordinary food for thought. Remember one of the things we taught earlier, $1 inside your business is worth 5 times what it's worth outside of your business. And this scenario accountability, I think, is Rick's term, which I think is a brilliant way to characterize what the theme is of this entire module. And I would say that a great place to start, because now you're saying, what's my action steps? How can I start? I think the first thing you do is you stop listening to this and you go to your most recent balance sheet and start taking a look at really how strong is your business. If you don't know quite how to read it, you should have professionals surrounding you that do, and say, sit down and explain my balance sheet to me and let me see how strong my business is. And then I would say, start to create a scenario, a fictitious scenario saying, what if something happened and for the next 3 months our sales were off 50%? What would happen to the business? Do a projection based on that. And if it is, you wouldn't survive it, time to start building up that battleship. So with that, as always, Rick, pleasure picking your brain and getting your wisdom here. And for all you listening, I got to tell you, just so you know from the inside, Rick and I are really excited to bring this information to you. We're passionate about it. It's our purpose. So thanks for being with us, and look forward to these next modules coming up. And this has been Module 32, Scenario Accountability. Let your business brain finish what your entrepreneurial heart started.